Good day, all. It is a good day in the markets. The Dow Jones Industrials are up about just a shy of a half of a percent. S&P up almost 8%, 0.9%, and the Nasdaq Composite leading the charge, not surprisingly, up 1.4%. So very good day for the markets. Russell had a really good day yesterday and is having another decent day today. Not unexpected to see this kind of follow-up based on the markets having sold down for a couple of weeks. We were in correction mode in the NASDAQ composite as of Friday last week when we were down just a tad bit more than 10%, which is a correction, and have certainly made up a bunch of that. So very nice return day yesterday, moving up nicely today as a follow-up. The problem, if there is one, and there are actually a few, is that the move today, these are gap higher moves. And gap higher moves means that a lot of investors didn't get in and didn't push the market up. The market, because the futures were significantly higher at the open, pre-open, the market just opened up there. So offers stepped away, and then any investors who wanted to buy in at the open had to step up and pay the next higher offer price. So you had these gaps, and the stocks mostly across the board opened up higher. But we haven't seen a whole lot of trading. We've seen some turnover for sure at these higher levels, but a lot of folks, if they're not in, who wanted to get in based on the dip, maybe not in yet. So that is a positive in our back pockets. We can and hopefully will see a push higher from retail. That being said, the retail folks who haven't gotten in, who may still be in, are happy that we're going higher, but there are some that are still in and are nervous now that they should have perhaps gotten out last week. And so far, they're feeling justified for staying in. But we're at a place where retail is going to get nervous. Why they're going to get nervous? Because there's a lot of profits on the table. The market is jittery. We're going into the election. We know the backstory here, and the front story still remains retail. I don't see institutional investors rushing in to lead these markets from here higher, as in back to higher highs and all-time highs. They're not going to take that chance going into the election. So who's going to drive this market higher? It's going to have to be retail if the market's going higher. That remains to be seen. My position is that retail may be on the sidelines, and they may not come rushing back because they certainly know that we're heading into the election. They certainly know that we had a tumultuous 2 weeks. They certainly know that SoftBank helped push the market up in August, which made a lot of them a lot of money. But the fact that SoftBank was able to move the markets higher, that one investor, one large investor, a whale, was able to move the market higher, probably gave some retail investors pause that if that can happen based on one, and they all followed, so for one, for all, it's all good. What if that reverses? What if there's a whale that comes to push markets down? What if there is no retail follow-up to this 2-day snapback rally? Well, we're going to see. And we're going to see soon enough. I think the next 2 days are going to be very telling. The rest of the afternoon might be telling. I would expect, I will hope as a bull, that we end up higher than we are right now and that we see buying into the close. That is what bulls want to see. And that's what market participants want to see, who are on the sidelines, who want to get back in, who maybe want to buy this dip. There's still room, there's still time, and it's just a question of, will we see some momentum, enough to bring in retail again, enough to push markets higher, enough to cause institutional investors to then come in before the election? Remains to be seen. I'm a little skeptical about it. We'll take a look at some charts and see how they pan out. But looking at the markets right now, we're in a good position. That being said, it's only just 10 minutes before midday. We've got a long day ahead of us. We'll see really 2 o'clock hour thereabouts, whether we see some sideline investors come in, try and bid up markets. And that's really what the expectation is. Everybody's thinking that way right now. A lot of folks that I talked to earlier and commentary and other things I've seen and read are basically bullish to the point where, okay, now is show me time. So that's where we are. We're going to look at the majors. We're going to look at the benchmarks. We're going to look at the big tech mega cap stocks. Take a look and see where they are. We're looking for proof that we can go higher. We're looking for caveats to where we are and where we might go if certain things happen or don't happen. So we'll discuss those when we look at each of the big benchmarks and at the FAANG stocks and anything else you guys want to look at. So again, we're looking at some increased COVID cases. We've seen a couple of spikes around the country, some 5% plus spikes. Nothing in any of the major cities that have shut down cities. We are seeing some of that internationally. Israel is locking down. So it's not over, folks. And a lot of people are still optimistic that a treatment, which is still out there, hopefully, a vaccine, which increasingly seems to be likely, maybe not by the election, but perhaps by the end of the year, perhaps into the first quarter. And again, that's keeping stocks and investors buoyant, at least their optimism. So again, there, but not there. As the markets have been now since March, then really significantly through the end of May and June onwards, we're there, even though we're not. So the expectations are we're going to see the other side of this recession, and a lot of the analysts are upping their earnings estimates for the third quarter. So they're already adjusting based on optimism. That's good if we get there. If not, then certainly revised earnings have gotten perhaps a little bit ahead of themselves, but we know they were knocked down, so they're coming from certainly very, very low levels, which makes them easy to raise small amounts at a time, which is what analysts are doing. The forward PE on the S&P 500, based on the latest estimates for S&P earnings for Q3 and Q4, because some of the earnings estimates go out that far, is about 32. That's still high. That's very high. So a forward PE of 32. Earnings have to really come up to justify that kind of PE. And if they don't come up enough, then the PE is going to be actually higher, and the markets will look a bit more overvalued than they already look. So let's take a quick look at some of these graphically, and let's take a look at the majors, the benchmarks, and we'll take a look at the stocks that we all watch. And then I'm going to come back and see if you guys have any questions. So I don't see any right now. Let's go to the videotape. So I'm going to go to a quick share. And here's what I'm seeing. Here's what I am apprehensive about. And I'm going to be out. I'm out on a limb, and I'm going to say that I'm in I think, a decided minority of folks, analysts, who are looking at this market right here and now and are skeptical that this rally is going to take us higher. I'm one of very, very few, and the folks I've talked to, and a couple of the media that I've done lately, I am certainly in the minority, and I recognize that. So am I out on a limb? Yes. Do I care? No, because this is how I see it. This is my analysis, and I'm going to justify it for you right now. So I'm going to go to the screen share, but first I see Peter asking about Nikola investigation by the SEC GM stock takes a hit as well. Let's take a look at both of those. And Linda's Apple announcement affect the stock this week. It should be a positive, Linda. And I'll tell you why, because there's a great deal of anticipation on and against this quote unquote super cycle of iPhone users upgrading to the new phone. So this is part of that super cycle that happens every couple of years, based on how old phones are, based on the improvements, based on the technology, and based on what investors typically do in terms of hold time as far as their hardware. So this is the beginning of the super cycle. So certainly Apple wants to see a splash with its wearables and with everything that they come out. And hopefully they're going to come out and throw caution to the wind and announce everything that they can and really get buyers excited, which will get obviously stock investors excited. And I think Apple should have a pretty good pop sometime this week. It's up a little bit today, not as much as I think investors expected to be up given the market's move this morning, but we'll take a look at Apple for sure. So Ruby's asking about good dividend stocks for a pullback. I'll give you those. We'll go over those, Ruby, on Thursday. I got a list for you. We got a list, and I'm checking it twice, and you're going to like it. There's some of them you obviously heard of before. Some of them you're going to be maybe a little surprised at, but I got a handful that I'm very comfortable with, and we'll go over those on Thursday. And so we're going to take a look at Apple. We're going to look at Nikola. And we're going to look at GM, see how it's performing today. Michael's asking about oil, mid-caps, thoughts on a bounce back here before the election. And we'll look at silver, SLV, and we're going to look at some oil. As far as oil, Michael, right now, the talk is that demand is down, and the talk is now, once again, we've gotten this every so many years, are we at peak oil? Has oil peaked as a fossil fuel, and are we moving to electric vehicles, electric everything, renewables at such a rate these days that we actually now have peak oil? Is that the case? This conversation is starting to circulate, and into it, we're getting some demand numbers, and none of them are positive. The only positive in terms of demand seems to be coming from China, which seems to be recovering from the virus faster than they even thought, faster than most global analysts thought. And so the numbers coming out of China are good, but still demand for oil hasn't picked up the way as analysts had estimated it would, given what some of the growth numbers are in China. So if China is growing strongly, but the demand from China for oil and energy isn't as expected, then that's part of that demand cycle that I think people are now starting to revisit and estimate maybe not as strong. That doesn't bode well for oil. This is why oil has been trading down. These numbers have been coming up. The IEA has come up with some numbers, and they have reduced demand factors in their models. So coming from the International Energy Agency and other agencies and outfits that track oil demand and supply, and generally speaking, the industry, nothing that I have seen is positive. Mostly neutral to somewhat bearish. And I think that's being reflected in the price of oil. And I don't see that reversing anytime soon. Makes me wonder and reconsider my position in oil, which I am sitting on and have a profit in. And again, I'll take a look at it, and we'll talk a little bit more about oil on Thursday and Friday. But for me personally, it may be time just to take what I have off the table and revisit. If the narrative is changing because of actual metrics, then it doesn't matter sometimes whether the narrative leads or the metrics lead. But if a narrative is substantiated by the metrics, yeah, it may be time to take a position off. So we just got a little pixelation there from a lot of wind blowing around out here, so maybe that's what's going on. But let's go and take a look. And I got a couple more. Peter's asking about Weyerhaeuser, lumber demand is up. Yeah, lumber is up, Peter, but it's also been a little bit volatile, to be sure. It was up, I think, had a 300% move and then had a 25% downdraft the other day, last week. So you've certainly been volatile for sure, but we'll take a look at Weyerhaeuser for you. All right, everybody, I'm going to have a quick look to see if there's any more stocks you guys want me to take a look at. And so I'm going to give you another 10 seconds. Anybody throw down anything you'd like to take a look at. And then we're going to go head over to the screens, take a look at some of these stocks graphically as we do on a regular basis, technology permitting, of course. And let's have at it. First up, thought I'd shock you with that one. Tesla. How about Tesla? Okay. How about Tesla? You got to love Tesla. This is such a story stock, such a narrative story, such a retail driven story. This is really just the supreme example of retail driving the bus and institutions trying not to look stupid, trying to change their expectations for earnings. The revisions on earnings for Tesla just frankly make me laugh. It's the analysts are so far behind what retail has done in terms of taking Tesla up, so far behind the actual stock move higher that they should be embarrassed. But I think they're making a foolish mistake trying to change their earnings estimates, jack them up to justify the stock price, as if they are saying, okay, we know the stock price is higher, and now we're going to tell you why it's higher because the earnings are going to get better. It's all backwards. Some of these guys, that's how they model, backwards. Take a look at the action in Tesla. Wow. A heck of a fall from grace, super quick, down 25%, and then just as quick, a bounce back higher. The gap today, if we're looking at the last bar here, this is today's bar. This is a pretty big gap here. This is what I was talking about earlier. Stocks today, buyers didn't have a chance to buy even between yesterday and Tesla closed pretty close to its highs yesterday afternoon. They have this huge gap here, and we opened up so robustly that not a lot of buying was, retail buying got through for those investors who like to kick the tires over Tesla. So is that sustainable? Is the move in Tesla sustainable? Yeah, if retail comes back in, it most certainly is. Can Tesla get back up and attempt to make new highs back up here in the 500 range? Yeah, it's possible. It's entirely possible. Can Tesla do it? Yes, it can. Will it? I don't think so. I don't think so. We're going to have to see an awful lot of retail buying for Tesla to come to retrace its move from the lows back to its highs. Possible, not probable in my book, but we're going to keep an eye on Tesla because why? Tesla is one of those bellwethers. It's a bellwether now. It was a bellwether for as far as the market falling. Tesla fell 10%. It was into correction mode on the Wednesday before the markets just crapped out on Thursday 2 weeks ago. Okay, so you had time to see Tesla basically flag for you trouble ahead. Now it's chasing the market higher. It's pulling the market higher off the bottom, at least as far as retail is concerned. So we'll see if it can continue to go higher. Then we'll assume that the market may have some legs. This rally may have some legs. And if Tesla rolls over, then we're going to assume that the market's going to get tired and probably roll over too. But we're not there yet. We're just going to keep an eye on Tesla as a bellwether. So let's go to the majors first, as far as the indices that we all watch every day, and partly because these are the indices that the financial press always talks about. And that's why, again, we talk about the Dow Jones Industrial Average, because for most news outlets, other than financial news outlets, the expression of what the market is doing is presented vis-a-vis the Dow Jones Industrial Average. The market is up 100 points today. The market is down 200 points today. The Dow Jones Industrial is up. Dow Jones Industrial is down. That's why we're watching the Dow. So here's this uptrending channel line here. And if you'll notice, here's the fall from grace, came down to what had been resistance, which we got above, is now support. We got down, we tested that support, went through it, have managed to rise above it, and we were above it as of yesterday, and we gapped above it today. So this small little bar right here is the gap up today. We are still, let's see, to get up here, we're looking at 28,900 close to. All right, 28,000. We need to get to 20. We need like 800 more points on the Dow before we get back above, or at least back to the uptrending channel, which, by the way, is going to present some resistance when we get there, if we get there. Right now, I don't think the rollover that we've seen in the Dow is complete. I think we need to see, or may see, some consolidation here. And of course, we could go any which way. My bet is if we see some consolidation here outside of the uptrending channel, the farther we go and the lower we go on less and less volume and greater volatility, the likelihood will be that we will break to the downside. So right now, yeah, happy to see the Dow higher, but not convinced that we're out of the woods as far as this recent little turnaround. I know a lot of people don't want to hear that, but I'm just relaying the facts as I see them. S&P up 0.86% for a nice day, but you got a similar situation with the S&P. So here we have this uptrending channel line here, and bang, we're decidedly below this big huge channel in here. We're decidedly below that. We came down to this support level, which we drew a couple of weeks ago, and because don't forget, we drew that really across here, and it's a little bit higher, but right down to it, which is fine. We bounced off it, but we're a long ways away from getting up above and to the channel marker and above and into the uptrending channel again. That's going to take a lot of energy. Right now, I'm not convinced that we're going to do it this week. If we don't do it this week, or we have generally speaking, an up week, but not a spectacular up week. In other words, we don't pick up too much more than where we end the day today, wherever we end the day today. I'm presuming we end it around these levels, hopefully higher for the bulls. Then that'll be decent. If we don't, then we'll revisit this on Thursday, and it's starting to look a little tired. But we're not there yet. Right now, so far, so good. We'll take the 2-day rally all day. And now, most importantly, why? Because once again, it is no surprise the NASDAQ composite that is leading markets higher, up 1.5% today. Your 1.3 here is a little delayed. I'm looking real time at my other screen. We're up 1.54% on the NASDAQ, up 170 points. But if you take a look here, clearly we have the lower ascending channel marker here, and we're well below that. We're here. We're looking good. We're trying to get back up there, but to get above that into the channel again, we're looking at 11,560 plus. Okay, that's it. We've got a ways to go, but we're talking about at least 250 points on the NASDAQ composite. That's 3%. We'll call that close to 3%. So again, we got an additional move that we need to make here that investors have to commit to get the benchmark indices higher. And again, that's a lot of energy. It's a lot of energy in a market that is counting on retail to come in and provide the spark. Right now, retail wants to come back in. They're starting to come in. But are they fully in? No, they're not. We hope, a lot of people hope that they commit. I'm skeptical. We're going to get down, hit the fabulous FAANGs real quick, and we're going to do that. Just do right down the list, hit them all, and then we got to look at some of your stocks and to see where we are there. Okay, Facebook. Okay, yeah, you know what? Fall from grace. This little channel we're in, this sideways channel, we're right in there, ladies and gentlemen. Okay, interesting, right? So are we out of the woods? No, we're right in there. This support, when we got above it, we came back down, crashed right through it. It's now resistance, and now this is our primary support down here. Okay, so we're up here. We're right here right now, and that's all well and good. The high today is 274.49 on Facebook, really to get up here, we got to go to 279. So a bit of a move for Facebook to make to get up there and face resistance and see how it handles it. We're not there yet. Let's see if Facebook can get there and see what it does. Otherwise, wouldn't surprise me to see a little sideways action within that channel. All right, the big boy should be in focus today for everybody. It should be in focus all week for investors of all stripes. Apple Inc. Having a decent day today, up almost 2%, and that's all good. But still, as you can see, a similar story. It's got a wider sideways channel in which it is apparently trading right now. It's got to get to that. And where is that level? It's a 128, or excuse me, 120. We'll call it 120, 121. So Apple has to get to 121. It's actually short hop for it. It can get there easily enough. But it's got to get there and get through that resistance. Over here is what I'm talking about. It's got to get through this resistance here, and it's got to stay above it and then consolidate above that. That's a lot to offer. It can trade around it and through it slightly as long as it doesn't come back down. As long as we certainly don't get at this point, we've got a little bit of support around 109. Okay, so we got some support right along in here. All right, so if Apple comes down, it's going to try and come down there. That will be right to this 50-day moving average, and that will make a lot of investors nervous if we get to that 50-day and break through it. Okay, we haven't broken through the 50-day on Apple, so if we do it, it'll be the first time in a long time, and that's going to make a lot of investors nervous, especially this week with the expected announcements, which are all presumed to be bullish for Apple. And if it's bullish for Apple, it's going to be bullish for the NASDAQ composite, which means it's going to be bullish for the other benchmarks, which means it's going to be bullish, period. That's a lot of expectation to hang on one stock, but that's what's happening. So Apple, big deal this week. And now let's take a look at Amazon. Amazon, just hanging in there, not doing much of anything. Trying to do the same thing as the other stocks, except really just doesn't have as much energy. We're still stuck down here. Now, this is the old resistance. Now is some support, and we're really trading right along there. So if we move that, this upward trend has been broken. You see? So we're down below this, and you got an ascending triangle, which if Amazon can break up here would be bullish. That's a heck of a lot of energy to get Amazon back up to 3,350. A lot of energy. Possible for sure. But right now we're in this rather narrow channel going sideways, and we're kind of bouncing along the bottom of that. We're bouncing along some support here. So Amazon needs to stay there. Otherwise, Amazon's got some next level support is about eyeballing this around, we'll call it about 28.80. So nothing exciting there in Amazon. To the contrary, rather shaky, being in that channel, brushing up against its lower support bound, and worst of all, being below its 50-day moving average, below its 21-day moving average, below its 7-day moving average. So not such a healthy picture looking at Amazon. And just take a quick look at Netflix since we're going through the list. It's the same thing. You see Netflix, looks like a double top on Netflix, and this is Netflix support in here. So we're going to create it right around there. And guess what? We're coming back down to it. It's trading below its 50, below its 21, below its 7. Not so healthy. So if you're wondering where I'm getting my bearish, shall we say, leaning, it's because if you look at the individual stocks that have led the market higher, other than Apple right now, I haven't seen anything that is so compelling that I want to say I'm betting to the upside, and there's enough energy to take stocks higher, because commitment wise, technically, they look like good buying opportunities. Could these be buying opportunities down here coming off these kinds of supports? Sure, they could. They could. I'm just not sure that the market, the retail's got the energy to make that kind of a move down there. I think they're going to get a little nervous, having come down and tested that a second time, maybe in a third time in Netflix's case. So I'll take a look at Google. And what do we see? Oh, more of the same. Okay. More of the same. Sideways channel. We're trading in that sideways channel. It's got a lot of support down here. We're not anywhere near that yet. We're in the kind of in the middle to the upper range here. The upper range of this is we'll call it 1597 to 1600. And so we can maybe get up there and if we test that as resistance, we'll see what we do. But right now we are trading, let's see, it was right on this bar here, today's bar. The 50-day is 1543, and we're trading at 1547, just a shade above it. All right, so we're really, let's call it, we're at the 50-day here. All right, we had broken through. We were trading through the previous couple of sessions on an intraday basis for sure, and on a closing basis, and that's not healthy. So we're just a shade above the 50-day now. Where we close today will be will determine whether we're above it or below it. And again, not the healthiest looking chart, not a bad looking chart. Hopefully this is all consolidation action here. But again, I don't see anything positive. I don't see anything worth jumping up and down about and saying, oh, that's just the way we want it. That's a great setup for going higher. I don't see it. Mr. Softy bounced out of the possibility of getting a piece of TikTok, and that's okay. I wasn't so sure what Microsoft was going to do with it, but here we are here. Okay, so we're looking at this bar here, and we're looking at this whole action here. Microsoft, one of my favorite stocks, trading below its 50-day. Okay, it was below its 50-day yesterday. All right, when it rallied, it was below the 50-day before. Below it closed before the day before. It's just been trading below, so it's now below its 50. It's right just a shade above its 7-day, and it's trading below its 21-day. So not the picture of health. Now we got a little bit of support right down here, which is, we'll call it 204. Could we actually go down to 203? We call it 203.4. And so we don't want to see Microsoft, which is trading we'll call it the 209 thereabouts. We don't want to see that come down there and test that. We got lots of support below that. We got lots of levels. But again, a company of this heft and size trading back down here, not healthy. Is it in a channel? Yes, it's in a channel. It's again another sideways channel. Surprise, surprise. Okay, so here's where's the sideways, kind of what the sideways channel looks like here. And we're Microsoft in the middle of it. Whether you use this boundary, you can use this boundary here, but in this case, we're pretty much coming down right to it. But use any one of these support levels, and we're in this trading range, and we're kind of in the middle of it, depending on which support level you use. Not the healthiest sign. All right. All right. Let's go through some of the stuff you wanted to look at. So we looked at Apple, and let's take a look at Nikola Tesla. You know, everybody, that's Tesla's first name. We know that Elon Musk took the name from the company, for his company, from Nikola Tesla's last name. And the truck company took his first name as the name of its company. So lots of stuff going on here. Holy mackerel. We've got Hindenburg and then Citron Research knocking Nikola, saying that it's a fraud, and I haven't seen specific proof, but the SEC is looking at Nikola, and it's looking at, I think, the accusations put forward by Hindenburg and Citron. So nobody knows really whether they're looking at Nikola because they're looking for fraud based on what researchers say. Because don't forget, these researchers, and Citron is a short seller, and so is Hindenburg, hence the name. So what they do is they'll tee up a short position and then they'll go and try and blast the stock down to the ground. Why? Because they are talking their book. They've got a position here. Not surprising. It's done all the time. But you can't just go out and say stuff like Hindenburg is saying, or that Citron is backing them up with. And Citron also said that Andrew Left of Citron said that he would pay half of Hindenburg's legal bills if Nikola came after them for accusing them of whatever really his accusations amount to, a fraud, really. But part of that was based on the fact that they claim, Hindenburg claims, that one of the promotional videos seen on YouTube has a Nikola truck rolling hard and fast on a highway. And the contention is that that was a fraud because the truck was towed to the top of a hill and let go. And so it wasn't even under its own power. Yeah, it certainly false advertising. Is it fraud? I don't know if that constitutes fraud, but neither, it may be in terms of the SEC's eyes. We don't know. We don't know if that's the truth, if that really happened or how it happened. So what's Nikola doing? It's getting beaten up because it was a great story stock. And, here's GM coming in here and saying, we're going to put $2 billion in, bang, right? Wow. Okay. It's a real deal. GM is backing it. It's all well and good. And then all of a sudden, not so fast. Hey, we got some bad news for you folks. It may be a fraud. Now we're down in no man's land. You want to take a shot with Nikola? You can take a shot down maybe around $28 if you want to take a shot at it. But it is a shot because when a company like this, when there's news like this on a company like this, that, by the way, doesn't really plan to have a truck on the road for a couple of years, I wouldn't take a shot. I just wouldn't. It's too much of a long-term hold and it's too much of a risk. It's played off the Tesla story. People have bought this stock, especially the Robinhood crowd and the day traders, the retail traders who are playing, the story stocks, certainly bought it. This is all retail folks all the way here. This is retail going through the roof, and now they're paying the price. So that's what the story stock, that's what a story stock is capable of doing when retail gets behind it and pushes the story. Now, the narrative, of course, has been flipped on its head. We'll see what's going to happen. I'm not a gambler in terms of this stock. So would I buy it down here where it looks like it's got support for a flip? No. If I wanted to trade it, and yeah, I would be inclined to trade it. Would I take a shot down there just to see if some of the news passes? Because if the news is not negative, if the news gets brushed over, if the SEC passes, it doesn't give grades to anything. It just may say, it investigated. He's going to be very quiet. They didn't find anything, kind of thing. Retail traders would jump back in. So if that's the play, you want to take a shot on retail jumping back in, because that's what they'll do. Especially now, looks awfully cheap. They will jump back in. So is it worth a shot? Yeah, if you can time it right, yes. How's it affecting General Motors? How stupid does General Motors look if they didn't do enough due diligence and hopefully they didn't push any money across the table to Nikola. But it's back up. So yeah, some of the got traded down a little bit. But GM is now one of those cyclical stories that if the economy is coming out of the doldrums, out of the recession, if we're on the other side of it, cyclical stocks are going to be better. We're going to want to own cyclical stocks. And here you go. We know previous high, we got above there. So investors are taking a look over here and saying, if we get above there, then the stock looks pretty good for a run, maybe to, the 35 range, 37. Could it make new highs? Sure, it could. Entirely possible. Autos have been hot, but mostly the used market. But in general, auto sector has been hot. And so looks like General Motors is sloughing off the negative news about Nikola. If they didn't pony up any money, nothing gained, nothing lost. They just look a little stupid. Silver. Let's take a look at SLV. See what's happening in the silver trust world. And yeah, it's a whole lot of nothing. Sideways. Positioning, just where are we going to go? What's going to happen? Is there going to be a flight to quality trade? Silver as an industrial metal also, is that a cyclical play? Yes, it is, just as much as it is something of a safety play. So yeah, it's holding up pretty well. Can't fault it. Just looks a little, it gets a little scary because of the huge move it's had. If we see some kind of action, then and we see any kind of faltering through, we'll call it like 24.11, 24.10.11. We want to see silver SLV stay up there, and certainly wouldn't mind seeing it climb a lot higher. Especially if you own it, you want to see it getting back up there. But so far, so good. Down below this support level, you just got a lot of space down here. That would make a lot of folks nervous. Same thing with gold. Okay, same thing with gold. We've got this descending triangle here, and we popped above it here a little bit. So far, so good. But if we can't stay above and consolidate here and actually climb above, we'll call this like 183 to 185 and stay above 83, 85 range, and at least try and consolidate there and get up. And we'd love to see GLD up around 87, 188, thereabouts, certainly 190 for sure. But if anywhere up along here, if we see consolidation, that would bode well. What's not healthy is if we start to trade back down into this descending triangle and we pierce the support, which looks to be around 179, we'll call it. So around 179, a lot of folks who bought and held and certainly owned lower are going to look at this area and say, maybe it's time to take some profits. Some folks are going to look at that and say, well, that's my opportunity to buy in, because if we bounce off there, then I'm good. But there's a lot of other folks who are going to look at that and say, you know what, I don't see making another run higher at this juncture. Let me take some profits and see where it can go. So be careful in here with gold. The long-term story, I think, for gold remains positive. But again, gold it's a trading instrument for a lot of people right now. So beyond the long-term prospects for higher gold prices, which is a long-term view, gold can go any which way. And if the market sees some hard selling, as I've said before, gold would not be immune from some margin selling across the board, cross asset selling. So that's where we're at with gold. We talked with Weyerhaeuser, lumber. Okay, you can see Weyerhaeuser had a really good run off of the COVID lows, just done exceptionally well, starting to roll over. But this is a reflection of obviously lumber prices here. And so with the huge run up in lumber, again, it went up 300% as far as the futures go. So that's a tremendous run for lumber. And a little iffy now. It's down today. I think it's down around 3% today. Even though Weyerhaeuser's down 0.85, I think lumber's down. Last I noticed, it was down around 3+%. So you're going to see this perhaps Weyerhaeuser weaken a little bit if lumber continues down, partly because there's a lot of profits on the table. And stock didn't get to new highs, but certainly had a heck of a run. And there's a lot of folks who were thinking, man, maybe I should just take some profits because I had a nice run, or if I've held it a long time, if it rolls over again, maybe I can apply my capital elsewhere. So just keep a tight eye on Weyerhaeuser. Okay. I think that about does it for most of the story stocks we wanted to take a look at. And I'm going to see if you guys have any other questions, and we're going to call it a day. Where are the markets? Oh, the good old markets, I tell you. They're where they should be right now. They're certainly holding on to their gains, and pretty much flatlined to dipped a little bit after the stellar opening that they all had. You saw what I saw, what I see. You've now seen it from a different perspective, not the bullish perspective, that the objective perspective, which is, yeah, everything looks good superficially. You look underneath it, the stocks that have pulled the market higher have been the leadership stocks. They're in a precarious position, almost all of them. Can it go either way? Of course, we've been here before. And what did we do in the past? We've rallied and gone on to make new highs. What's different this time is, number one, retail and going into the election. So retail has taken us up in the past. We know that. Took us up since March. And we haven't really had a significant test of the rally since March. Just haven't seen it. We're seeing it now. Okay, and the primary benchmark, the bellwether you want to look at now is not Tesla. It was Tesla. Tesla did its job beautifully. The FAANG stocks have done their job beautifully as a bellwether. They warned that there's problems, and now you want to really keep your eye. First and foremost, number one bellwether right now for the markets is the NASDAQ Composite. It's got to get above. It's sending lower channel line, that marker, and get above there and stay above there. And it's got a long ways to go before it does that. So kind of in a little bit of a slippery slope territory. So that's the warning for today. Hope I'm wrong. I'd love to see the markets just gather themselves, retail to jump in, and investors, institutional investors follow them up. And Apple could be the stage, the next rocket stage to fire to do exactly that. It's going to be a big week for Apple. All right. Michael's bringing up SLV has already been below 24. Is that like the cracking an egg? Is that like cracking an egg? No, not really. It's more like being aware that it is an egg. It doesn't mean it's cracked, but yeah, now you know you're holding an egg. So we're not there yet. We're above it, and that's all that matters. If it gets down to 24 again, doesn't mean it will crack there. Okay, Michael, it's not. To me, it hasn't cracked until it does. And just because it gets to 24 or even breaks 24 doesn't mean it's going to fall apart, because that will shake some investors out. And depending on whatever everything else is going on, that may be a buying opportunity. It's hard to tell right now. So no, is that an absolute sell, line in the sand to sell? No, not at this juncture. You might want to take some profits if you have a bunch. Why not? You know what I say. It's always good to ring the register. Max is asking about Diamond Peak. No, Max, I don't know about Diamond Peak. GM sold them a large plant. Let's take a look. DPHC. Diamond Peak Holdings. It's down 4% right now. Had a heck of a run up. Maybe that's on the news. But then again, this might be just another story stock, Max. I don't know enough about it. I'm looking at the chart and the way it's moved, that kind of parabolic move from a whole lot of nothing. A whole lot of nothing. And I'm going back a year. Looks like it came to market around April of 19, somewhere around there. Absolute nothing. Nothing. However, was brought to market. Maybe it was a reverse merger. I don't even know. But just the absolute nothing, just dead until really looks like August 3rd. It woke up with a vengeance. And the day before, we're going back to July 27, the stock was closed at 10.24. The next day closes at 12.25. 4 trading days later, it's at 13.34. A couple days later, it's at 24.68. Parabolic. How high did it get? It got to a high of closed at 27, intraday high of 30. Okay, so yeah, looks to me like a story stock. I hope you own it. I hope you wrote it higher. I wouldn't have seen it coming, but then again, if I was following what was happening with Nikola, then I may have, because those story stocks, they all get all boats rise with the tide. Let's put it that way. So if you own it, good luck. Be careful. Again, I don't know enough about it, but thanks for bringing it up for everybody. Let's see what else we've got here. Linda's unit, PLD, and Spice. Let's take a look at those. UNIT is Unity Group, up 2.25% today. Let me just adjust my chart here. Looks it's had a nice ride up. It looks to me like it's a little tired, rolling over. It's trading below its 7-day, excuse me, it's 21-day, and it's 50 days. Come right up to it today, and it's trying to bounce today up 2.25%. But it's rolled over a little bit. Is it in trouble? I don't think so. I don't know enough about it to know what it does. I apologize for that. I would say if you own it, 8, probably 875. I would say 8, maybe 890 thereabouts. I'd keep a tight eye on it if it comes down to there, because there's some support there, and you want to see it stay there. But below it's 50. I hope it's not rolling over. It's a sloppy chart. So again, whatever it does, investors have had a ride with it. And you also want to look at PLD and Spice. As far as PLD goes, Prologis is like a lot of these stocks, it's enjoying a nice ride higher, and it's sort of just, I think maybe some of the brightest expectations for this one are tarnished somewhat, simply just by the fact that the market has been trading down a little bit, and so there's been some profit taking here. Stock is still above its important 50-day. Right today, it's above it's 7 and it's 21. So I still think this is a good hold. It's performed really well, made new highs. If you've got a bunch of profits in it, they've got a lot of support at, we'll call it 90, 98, 99. Got a lot of support in there. And you want to keep it above there. If it stays above there, you're hopefully off to the races with that. Below there, you want to just take some profits, especially if the market is dipping and the stock and Prologis gets down to 80, 98, 99. Take some profits. Won't hurt. You can always get back in lower. And you also asked about Spice. So let's take a look at SPCE. And this is the Virgin Galactic Holdings. Again, just a whole lot of nothing. This is another story stock you're going to have to stay with and follow. And if you like it long term, then ride it out. It's just not, for me, it's not a place where I would apply a lot of capital for sure. Stock is kind of rolled over. It's just look kind of flat right now. Be careful with it. It's a story stock, and depending on the story, it's going to go one way or the other. Michael, yeah, we talked about SLV, and Doug, AYX. Alteryx, having a nice day, up 3.71%, very nice. But it just got hammered. I think this stock is capable of bouncing. It's got, first of all, we talk about gaps here. Talk about a gap. That's a huge gap. Can this stock bounce? Yes, I think it can. It's got a ways to go, but if you own it down here, I would say stay with it. I would look for it to bounce. It gets dicey below 105. then I think that's going to scare a lot of people that it breaks down there. And if you still want to hold it, that's going to be a little more painful for sure. But if you own it in here, I would try to see if it can close that gap. If the market rallies, if we get retail coming back in, if we can go higher, if Apple has a great week and the markets pick up a bunch of steam, Alteryx should probably pick up some steam too, and we'll see that go a little bit higher. But right now, it's looking pretty tired, pretty sloppy. So just be careful with it. There is upside there, but it's going to take a catalyst, and I'm not sure what that catalyst is going to be. Reminds me a little bit of Sienna, which has been acting really poorly. I liked Sienna again to fill the gap. Sienna symbol CIEN. I thought certainly look at the company's healthy. The balance sheet is really good, and I thought, wow, this is a good opportunity to pick up a really quality stock that's just been beaten up on not on the earnings, on the forward guidance, and it hasn't worked out yet. So still a long-term hold because again, the balance sheet is great. I see the stock hopefully consolidating down where it is. But that's a similar story to Alteryx as far as that gap and filling that gap. So Peter's asking about MGP, and hedge funds are buying that? Okay. Well, again, if they are, maybe you want to follow along. Every time you get a narrative story that hedge funds are in, and if you get other investors get in, and that retail investors will maybe pop into something like MGM Growth Properties, but I see it's sideways and it's trying to break out. You got some buy recommendations, getting hedge funds. Don't see why. You don't see why. I don't see why either. Again, I really have to really look at the balance sheet and take a look at debt service and see what they're doing. If they're not too leveraged, are they selling some properties? Are they buying some other properties cheap? It's a tough one. That's a balance sheet equation there, and certainly a leverage equation. But I don't see it either. Is this something I would rush into? No. I kind of agree with you. If that's what you're saying, you don't see why. I don't see it either. Hey, everybody, thank you very much. JP, with last but not least, in with Zwillow this week, Zillow. Look, it's how can you not like it? The housing story has been a real positive. I think there's pricing power in the housing sector. There's pricing power in, I think, some of the underlying. Obviously, we see there's pricing power in lumber. So I see Zillow as participating in the fact that there are more homes being sold, and the stock has done very well. It continues to do well. It's got a really good looking chart. So if you own it, it looks good. Stay with it, and certainly having a good day. It's not too far off from making another new high. So hang in there. I wouldn't sell this one if you're worried about taking profits. I don't know, maybe 79. If it comes back down to there, but that's a long way to come down. If you want tighter range, really, I don't know, maybe 87, 88. If it comes back down and you're nervous, but look, it looks good to me. But again, there's never any harm in taking profits. It's had a heck of a run. So hopefully you've enjoyed that ride up, JP. Hey, everyone, thanks. I'll catch you guys all on Thursday. Cheers, everyone. Have a great week. And be safe out there.